Okay guys, just thought I'd take a quick look at the SP 500 tonight. We're all waiting and watching and hoping for a bounce at the moment, and I just thought I'd play with a couple of popular indicators and just give a little bit of a bearish view. And this is not my own views, but we're all looking for an imminent bounce, and I just wanted to throw some indicators on that would suggest that the bottom could be quite a long way from here yet. And I think it's really important to make sure you do see a signal before throwing yourself long into the market again, just in case we're way less into this downside leg than a lot of us hope. And again, I'm not suggesting this is going to happen tonight. Could be the bottom, but just for interest sake, I thought I'd throw a few indicators on the chart and just have a look. So we're going to use the fibs for a start. And this is a 5-year weekly chart of the S&P. So I thought we'll whack a few fibs on it and just see if it seems to be a historically relevant indicator for a start, because if it's not, then there's probably no point using it. But there's running the fibs from back in 2007 highs to the bottom of the GFC. It does look like it has some statistic relevance. As you can see, it bounced pretty well right up to, it originally actually found some resistance around the 50, a little bit higher. Of course, none of these are an exact science, so for me this 38 to 62 is really a zone more than an exact level, but certainly looked like it hit some resistance at the 50s, definitely hit some resistance around the 62, retraced back to the 38 and retested that 62 again there before breaking. So definitely shows on that time frame that the fibs seem to pick up some of the key turning points. So we'll take it off that frame. Let's have a look at the next one. So we'll take it from the bottom up to the original high after that bottom, the initial high I should say. Okay, and again look at that, it picked up the 38 fib almost exactly. So the fibs seem to have some relevance again on that zone, on that range, as to where these things are going. So I suppose initial thought is this previous resistance becomes support, this resistance there, and we look at 1225 odd for the S&P as a possible turning point. So we'll take that off and we'll go to the next range from this one to here to there. And again, that 1225 odd area seems to come up. The 50s down around between 1175 and 1200. So there's a bit of a zone which I suppose picks this little range up here and here as well. Some strong support there, strong resistance there on the way. So that zone may definitely become an area where we could look at for a bounce as well. But still some way away on the S&P. As you can see, it's 1272 it closed on Friday. So we're talking anywhere between the sort of 1220 and high 1100. So still a fair swag to go if any of these figures became relevant. Alright, I might delete those for now. I'll have a look at some Fibonacci's. Not Fibonacci's, sorry, some pitchforks, which I play with from time to time. I'm certainly no expert on them, but let's just have a look at pitchforks and see if they can give us any indications as well. I suppose what I'm looking for is areas where several of the key indicators tend to overlap, just to give it an idea of what could be a possible area of bounce. There's the pitchforks running off this high, that low, this high here. Nothing really there except this continuation like up here looks to have picked up the resistance quite well. So another one of interest there. So we'll run it from the next slot. We'll run it from the low in 2009 up to that little high there and down to this low here. Seems to pick up that upward channel pretty well, and this extension line here again may give us some clues to an area of bounce, which could be anywhere around picking up this low from the post-Japan nuclear crisis, which we're pretty close to now I think, or again looking at that previous resistance there providing support, which is pretty much along that line you would think, somewhere here. Again, none of these are exact sciences, we're just looking at relevant areas. So yeah, so this 1225 again could be like a likely target. going to take that one off again, and we'll run it just on the last range here. So we'll go from this one down here, and we'll take the high. Okay, now the midline of that is around, we're probably at this line here. The midline's way down here around the 1150, 1175. So I might leave that one on for a moment, and we'll throw some fibs on again. And let's say we run the fibs from, even we just do this last range here again, that range there. 50s around the 12, and there's the 62, pretty much overlaps that central line there around the 1150. So there's nothing to say that we couldn't even get down here around the 1150, which if the SP 500 got that low, retested that, and then started to bounce back up towards this top line, longer term that chart would still look relatively good. So I'll just get all these lines off. So we're talking about a dip down here would produce a higher low, this one, and now another one down here. Probably doesn't exactly honour any trend lines. I'm sure the trend line's about where we are now. Draw that one in. So there's the trend line there, so we're not far off that one. But yeah, a dip all the way down at 1150, which is still another 100 plus points on the S&P 500, really in the long term, if you look back at this, wouldn't look too out of place. So I suppose there's no real message behind this video other than, the dip could be way deeper than, tomorrow or the day after, or this imminent bounce that a lot of us are talking about looking for. It could be a long and protracted dip anywhere down into those areas that I discussed in the video, or we might bounce tomorrow. I as I keep harping on about, I don't like to try to predict anything whatsoever, and I try to really focus on trading the action in front of me. That's the S&P 500 daily. And we could probably run the same projections on there and just get a bit of a shorter term view as well. But what I might do just to finish off is have a look at the XJO and do the same. We'll pull up the weekly again, so we're talking weeklies. Alright, well, let's pull our overlay over it again. Okay, we'll start with those pitchforks again. Top, that one, and let's say that one. Doesn't seem to be much relevance in that one whatsoever, so we'll get rid of that. Let's go that. Not much of a trend in that area there, so again, the pitchforks don't look very relevant at all. Probably the only other thing I would do with these is maybe pick up this top one, bottom one, and then take that original high here and see if that gives us anything. And again, it really doesn't. So the pitchforks don't seem terribly relevant at the moment. I may just be drawing them in the wrong place, of course. Let's have a look at the Fibonacci's and see if they can give us any clues. Run from there to there. Okay, so it looks like at the moment we were bouncing between 38 and 50, with quite some definition there. It definitely looked like it was a range that was holding it, and even now it appears to be holding that range. Did dip under there, and I would suggest that the amount that it dipped under there probably was pretty similar to that same range in here. So if we were to draw a parallel line along here, it probably would just about pick that up as well. So we're testing the bottom end of that range. Probably not a lot more to be gleaned out of that either. We could always go from this one to this one, and we could have a look at the 50, which picks up this previous resistance pretty well. And the 50 is way down at probably about 40.75, something like that. Let's have a look at where that was right there. About 40.80. So again, 40.80 is a fair way down, but on a weekly, if we were to dip down to 40.80 and then slowly start to bounce back up, break this sideways range, you'd look back at that in a year or two's time and say, oh yeah, there's a higher low, and off we go. So again, that's, we're talking a good 300 or 400 points from where we are now, that really in the long run you'd look at that chart and go, well, that's fair that it's bounced from there. We're still recovering from the GFC. Obviously you could look at this little double bottom to provide support as well. That's at, where's that one, 43.8, no, 41.75, 41.80. So that's still quite a way away, and we could bounce off there and effectively just confirm this sideways range that we're in. So anything can happen. We definitely could have quite a bit more downside. Let's hope we don't, and we're back on the ball pretty quickly. But I just thought I'd have a play with that and have a quick look at some possible downside targets. Anyway, that's it. Bye.